Hey guys, welcome back to Reserved Investments on YouTube. Today, we're going to have a candid discussion on two concepts that I consider very important for any investor out there, even anybody who wants to live their best life. This can apply to personal relationships. These concepts can apply to romantic relationships. And of course, what we talk about on this channel, investing in antiques and collectibles. Now, you're probably wondering what these two concepts are since they can apply to both your personal life and your financial life. Well, one of them I already taught you. If you guys recall, earlier on this channel, I introduced the concept of opportunity cost and how it relates to economics, finance, business, investing in antiques and collectibles, even your own personal relationships. Now, let's quick do a review of what opportunity cost is. The basic definition of opportunity cost is the loss of potential gain from other alternatives when one alternative is chosen. Let's use this as an example to review this concept. Let's say that you want to put $100,000 in a rare comic book or a Pokemon card or a rare coin or a Magic the Gathering card or a rare action figure, some type of item that is in probably the top 3% of that particular collecting category as a whole. You want to take $100,000, you want to invest in that item over the short term or the long term. Well, as opposed to buying that particular item for $100,000, you have multiple choices what to do with that $100,000 instead. You could put it towards a rental property, invest in real estate. You can put it in the stock market, whether it be via a mutual fund, an ETF, or I would not recommend this. If you want to take that $100,000 and you want to put it in one dividend-paying stock, you could do that as well. So when you analyze the alternatives that are given up when one investment is chosen over another, that is defined as the opportunity cost of that particular choice that you have made. Now, you can apply this also to personal relationships. You can apply it to romantic relationships. If you choose to get married, most people only marry one person. Guess what? If you choose to commit to that person through marriage, you're probably not going to be able to get away with marrying someone else in addition to that individual. So the opportunity cost is you were dating two women. You chose to pursue a relationship, a committed monogamous relationship with this one woman over here. You got married. Well, as a result, you did not enter into a monogamous relationship with this other person. That is considered an opportunity cost, what you gave up to go after that one relationship or that one person. So this relates to not just the antiques and collectibles trade, not just investing in general, but the concept can relate to almost every aspect of your life. Now, I consider this to be one of the most basic principles that I teach on this channel because there's a lot of very wealthy, high-profile people out there that use me as a consultant in the antiques and collectibles trade. And it's always interesting to me that when I bring this concept up, a lot of them really have not thought this through, meaning they just want to go to the market, they want to put X number of dollars in a certain collectible, or they think that is the best investment they can find at present time. Now, on the flip side of the coin, there are people that come to me and they say, you know what, I just want to preserve capital, Sean. I just want to maintain capital. If I go after this rare Picasso painting, or if I go after this rare historical artifact or this rare coin, I know that just due to the way this market has been working in the last 10, 20, 30 years, some cases 100 years, my money is at least going to be there when I go and get it again. I'm already financially established. I have X number of dollars in stocks, bonds, ETFs, mutual funds, real estate, and the like. I'm diversifying assets in the antiques and collectibles trade. I understand the concept of opportunity cost. So it's always enlightening to me to see what people think of this core concept. And it also tells me, once I ask them about this core concept, if they've really done their research, if they've done their homework on the particular item that they want to quote unquote invest in or park money in for either the short term or the long term. Well, there's another concept on this channel that I have yet to talk about, and that's what we're going to do today. There is something called the sunk cost fallacy trap. And this kind of ties in with the idea of opportunity costs and how they relate to investing in any type of asset, not just antiques and collectibles, any type of asset. Now, the sunk cost trap fallacy, the best definition that I could find for you guys, is through the website known as Investopedia. So I'm going to simply read their definition. I'm going to expand on it a little bit. Then I'm going to give you my own thoughts on this particular topic because I see a lot of people making a lot of mistakes in the antiques and collectibles trade. And one mistake that I see a ton of people make, especially even high-end collectors on the traditional antique side of the equation, they don't know when to let go of certain items. So let me read you the definition, and then we're going to expand on it. Sunk cost trap fallacy refers to the tendency for people to irrationally follow through on an activity or an investment that is not meeting their expectations. This is because of the time and or money they have already invested in the said investment or activity. The sunk cost trap fallacy explains why people stay in toxic relationships even though they know they should leave, why people finish movies they are not enjoying, why people finish meals that taste bad, why people keep clothes in their closet that they never worn, and why people hold on to investments that are underperforming. Now, this is going to shock you guys, but I fell prey to the sunk cost trap fallacy. As a matter of fact, I'm still under the delusion that this fallacy doesn't apply to me. I'm going to be 100% honest. If you guys recall, if you go back and you watch any of my Q&A segments, the question that I get asked almost in every Q&A, Sean, what was one of the biggest mistakes you made in the antiques and collectibles trade? Sean, what's one of your biggest regrets? And I tell you guys, I bought into vintage machine-made marbles back around 2010, all the way up through 2012, 2013. And I probably have $10,000 to $20,000 sunk, pun intended, because it does apply to the sunk cost trap fallacy, invested in that collection. In fact, most of that collection is upstairs, literally in my living room, sitting in display cases. Now, this is something that you guys don't realize about me. I'm not always as rational as I appear to be in these markets. Sometimes I get emotionally involved. Sometimes I analyze a market more out of passion than out of actual finance. And that gets me into trouble sometimes. Now, at the age of 44, I've gotten a lot better. But over the years, in my 20s, in my 30s, I did make a lot of mistakes in some of these markets, guys. You guys are aware of that if you watch this channel for any length of time. I talk about this. Another market that I made a huge mistake in, which really wasn't that bad, it may have costed me only $1,000 or $2,000, was the vintage Pes Market. That was a market I never really should have got into. But the market for vintage machine-made marbles really taught me a valuable lesson, because even to this day, I will not sell those particular marbles because I know I'm going to encounter a loss in the thousands of dollars. And I just don't want to deal with that negative emotion that comes from selling that collection at a loss. So I literally have in my display cases upstairs $10,000 to $20,000 worth of vintage machine-made marbles from the 1900s, early 1900s, all the way up through the 1940s, 1950s, that are literally collecting dust that I will not let go of at present time due to the sunk cost trap fallacy. So in this particular video, normally I tell you guys, don't be a Timmy, don't be a Kimmy, don't try to be a Poindexter. In this video, I just want you to know that don't be a Sean is pretty much the meme that would explain this particular video if I had to give it a topic or a visual aid. So I want you guys to be aware that sometimes you're going to make an investment in life, or maybe you're going to get involved with the wrong person in a relationship, and you're going to go, you know what? All this time and money I have invested in this person, I just can't let go. This is a video for me to tell you that it's okay to let go. It's okay to incur a loss at any time in your life if it means taking that money, taking that time, and investing it elsewhere, and making sure that you don't make that same mistake again. And that's really why I'm doing this video, because I don't want you guys to have a collection in the value of $10,000 to $20,000 just sitting somewhere, and you can't bring yourself to sell it because you know you're going to incur a loss. And that's my ego at work. I'm going to be 100% honest because I tell you guys this. One of my major flaws is that I can be very arrogant. And being arrogant in the antiques and collectibles trade has paid off for me. I've made a lot of mistakes, but I've also made a lot of successes where I took risks. And as a result, I made a lot of money. If you guys recall, I did do a whiteboard video here where I talked about how I sold collectibles during the wonderful pandemic that were increasing in value, and I went after undervalued stocks at that particular time. Well, I made a lot of money doing that. But guys, I do make my fair share of mistakes. And what I'm going to do in an upcoming video is I'm going to put this marble collection on camera, show you guys what I paid for it, and break down what I think these pieces would sell for in the secondary market today. Because I'm going to be 100% honest, even though I bought a lot of these particular pieces at high-end auction companies, most of those same auction companies will not take back this collection because the market changed. And this is another concept we got to talk about in this channel in future videos. Markets in the antiques and collectibles trade can and do change. The only constant is change. So why I'm doing this video is I just want you guys to be aware of both opportunity cost and the sunk cost trap fallacy. Because honestly, if I was applying logic to this scenario, this is how I'm going to end this video, what I would do is I would sell that $10,000 to $20,000 marble collection, and let's say that I get $5,000 or $8,000 for it. I would take that $5,000 to $8,000 and I would put it in another investment that is performing well. So in this situation, don't be a Sean. It's okay to be a Timmy, a Kimmy, and a Poindexter if you don't let the sunk cost fallacy destroy you. Now, to be fair, guys, I got to state this as well. I can afford to have $10,000 to $20,000 worth of marbles just sit in display cases upstairs. The average person watching this video, I'm going to be 100% honest, probably can't. But either way, if it was a $200 or a $500 item, the correct course of action would be to sell and cut the losses. Hope that helps. I hope that you get some insight from this on how all of these financial and economic terms like sunk cost trap fallacy, opportunity cost, how they play not only in these markets, but also in your personal life so that you can become better. Because that's the name of the game in life. You want to level up spiritually, financially, mentally, emotionally, physically. Thank you, my brothers and sisters, for watching. Have a great night.